Hello. So in the earlier video, you have seen the detailed explanation of various balances which were considered in trading profit and loss account and balance sheet. So in this video, I'm going to cover the same in quick recap model. So every balance, it will be right away considered. So just it's going to give us an overview how it look like in the final accounts, that is trading profit and loss account and balance sheet. So let's have a quick look into the template. So this is the overall view of trading profit and loss account and balance sheet. Okay, so as mentioned earlier, first half is trading account, next half is profit and loss account, and finally the balance sheet with liabilities and assets. In trading account, we have both debit and credit sides. A debit side will have all direct expenses and credit side will have direct income. So if you look into the details, you can have all the entire direct expense details, which are absolutely relevant to manufacturing and production process. So any expenditure considered here is relevant to manufacturing process or production process. That's why they're called as direct expenses. And the only possible direct income is sales. So if you look into the details, opening stock, purchases, of course, I had given in detail explanation in my previous video. So just we are having a glance at now. So carriage inwards and carriage both mean same. That is nothing but transportation incurred to bring the raw material, cartage, freight, and customs duties, import duties, clearing charges, octroi, excise duties. If you notice, everything relevant to production are expenses incurred to bring the raw material into the premises, which is utilized for production. Okay, so factory rent, of course, factory is the premises where production takes place. That's why factory rent is to be considered trading account. Gas, coal, water charges, factory, oil and fuel, heating and lighting expenses. So if you clearly monitor all these expenses, all these are directly or indirectly relevant to manufacturing process or production process. That's why are called as direct expenses, should be considered debit side of trading account. Okay, and sales it being its in direct income will be considered trading account credit side. So if the credit side is more, if the credit side total is more than debit expenses, then we'll get gross profit. This gross profit will be brought forward to our P&L account. And in P&L account, as mentioned earlier, we consider all administrative and office expenses. So those expenses will be called as indirect expenses, which should be written at debit side of P&L account, and indirect incomes at credit side of P&L account. So various indirect expenses are basically they have been categorized as administrative, selling and distribution, and financial expenses and other losses. These are the indirect expenses. So if you notice them clearly, these expenses are no way related to production. Okay, called as indirect expenses will be written at debit side of P&L account. And various types of incomes, indirect incomes are discount received, interest received, commission received, rent received, interest on drawings, apprentice premium, profit on sale of assets, buy bad debts record, and so on. So as mentioned earlier, if the income side is more than expenditure side, then we'll get net profit in P&L account. This net profit will be added to capital at liability side. Whereas if the expenses are more than the income, then we'll get net loss. The being expenses are more than income, then should get loss. So if it is loss, then that loss balance will be deducted from capital. Okay. And finally, coming into balance sheet at liability side, we'll have all payable amounts, like loans taken from others, creditors, bills payable, overdraft, and so on. And at asset side, we'll have different properties which are under our possession, okay, like building, machinery, furniture, and various receivable amounts from debtors, bills receivable, and cash in hand, cash at bank are also considered as assets. So in short, at liability side, we consider all payables, and at asset side, we consider all receivables. This is how we transfer the balances provided in trial balance to trading profit and loss account and balance sheet. Hope you are ready to solve the final accounts problem.